one key ingredient which you need to succeed as a profitable Forex trader is risk management. That's why one of my favorite quotes is from Warren Buffett, which he says, it's not how much you make when you are right, but how much you lose when you are wrong. So capital preservation is very, very important. So how can you go about to preserve your capital when it comes to Forex trading? One thing you need, whether you like it or not, is to be able to use the appropriate lot size. So there's a free tool, a free software, which we have been working on for a couple of years now, and it's finally available, which you guys can use totally for free to easily calculate what lot size you're going to be using on any trade, so that you can only risk a percentage of your account, or you can only risk a specific percent of your account. So no more worrying what lot size should I use, how much should I risk. This software is going to help you as a trade assistant to easily ascertain that. So you need to stay to the end of the video, because if you guys check on all my videos, you guys have been asking the same question. So you need to stay to the end, and I have a bonus and a surprise and a giveaway for you guys at the end of the video. So let's get straight into the video. There's no delay, there's no intro. Good. This software we are talking about is known as a Forex trading calculator, and is provided by Lionheart Funding Program. Like I said, it's free to use. You don't need to pay anything. You don't need to buy anything. Just go on Google and search on Lionheart Funding Program, and then go to the website, click on tools, and then trading calculators. It's as easy as that. Or just check the link on the video description. Check the link on the video description. Just click on it. It's going to take you directly to this particular page, or it's going to take you directly to Lionheart Funding Program, where you just click on tools and then trading calculators. Good. Now, I want us to take a hypothetical example, right, so that the calculation will make a lot of sense. Let's just go on trading view, and we're going to quickly go on one of my key strategies that I've been waiting for a while. Let's go to this is gold. Yeah, let's go to gold, and we're just going to quickly do an analysis so that we see where we could have possibly gotten in on gold. So let's see this one. Okay, we're going to quickly delete this one. I can see a key opportunity right here. So this would have been, we are just doing a quick analysis. This would have been, the market is still in an uptrend. That's what we're doing. For GUMVRO, the strategy we are using is known as GUMVRO. So if you want to know more about our strategy, just check the link on the video description, or check the link. I'm going to leave the link above, or just go to my page, check on GUMVRO. That strategy, people are using it. It's a strategy any dummy, any beginner can use. So make sure you check that particular strategy. Now, I don't want to take time going through the strategy. I'm just going to go straight into the video. We have, first thing, we have 3 steps in that strategy. Confirming the market direction. If I can just zoom in, you can see we had a cross right down here, right? If I can just do this, this is where we had a cross right here to confirm an uptrend. That's point number 1. Since you've confirmed that the market is in an uptrend, you only want to take buy trades. So you can either enter at the cross of the candle, or was the candle has already crossed, was the moving averages have already crossed, you can only re-enter when the market pull back to either the 38, the 50, the 31, the 50, or the 68% level on your Fibonacci tool. So we have a couple of tools we use. So now we need to bring in our Fibonacci to see if we can enter this market right here. So this will be our most recent swing low, most recent swing high right here. We're going to bring our FIP from most recent swing low to most recent swing high, and boom, you can confirm the market already pushed right down to one of our key levels, which is the 61 level, and then close bullish. So we're going to be buying Great Britain Pound USD. As easy as that, we're going to be buying Great Britain Pound USD. Remember, this is going to guide you to calculate the risks based on any other asset you are trading. So we're going to risk a total of let's risk 50 pips on this trade. All right, let's risk 50 pips on this trade. 50 pips. Good. Let's risk 50 pips on this trade and go for 100 pips. Risk to reward of 1:2. That is it. Okay. So that's a trade right there. What we need to be able to calculate our lot size is, number 1, you need the asset. Number 2, you need to know how many percent you're going to be risking per trade. So in our case, let's say we want to risk 1% per trade. You also need to know the stop loss in pips. In our case, it's 100 pips is our stop loss. And then you need to know your account size. Those are the 4 things. Since we know all these 4 things, You then go back to Lionheart Funding Program Position Size Calculator. Make sure you click on Calculators and then Position Size in Pips. Make sure you click on Position Size in Pips, and boom, the recent update that is even on this software is now you can just search the currency pair. Which currency pair are we, or which asset? Euro USD. All right, Euro USD is our asset. So we just quickly go back here and we just search on Euro USD. Remember, if you write like this, it's going to disappear. So make sure you put euro and slash. You need to put the slash USD. It's as easy as that, all right? So make sure you put the right, you must put this symbol. So let's just say I'm searching Great Britain Pound USD, Great Britain Pound. I must put the slash, all right, slash USD. Good. Then you can see that is it. I just click on it. But in our case, it's Euro USD. Good. That is it. Our account size, let's just assume we have a $100,000 pro firm account, and we're going to be risking 1% of our account, and our stop loss is 50 pips, right? Remember, what you need to know, or what you need to use now, is the lot. You need the right lot size. What would determine that you can only lose 1% of your account if the trade doesn't go your way is the right lot size. So this software is going to give you that specific correct lot size you can use. So after putting all of this, just click on calculate, and boom, you can see amount at risk $1,000 because we are risking 1% of our account. Lot size 2. Perfect. So the lot size is 2. Now you just go back to your MetaTrader 5. Just go on the lot size place. Now you can put 2 as your lot size. Click on buy, and then you just go on modify. Your stop loss is going to be obviously 50 pips. And your take profit is going to be what? Your take profit is going to be 2 times that, which is 100 pips. Because we are going for a risk to reward of 1:2. If you are going for a risk to reward of 1:3, it means your take profit will be 150 pips. Based on whatsoever you like. But now you already know how to calculate that specific lot size. I want us to take another example so that it shouldn't just be something like Great Britain Pound USD or Euro USD, which is just direct, right? Let's pick any other pair like even AUDJPY. Let's just pick any pair like AUDJPY, and we're going to click here just to see what's happening in the market. We had a cross right here, so that's a clear buy. First step is determine if we have a cross or not. We have a cross right here, which is indicating a buy for us. We don't even need the Fibonacci in this case. So this one we're going to be entering because now we have confirmed that the market has crossed. We'll just put our stop loss somewhere here on 50. Let's just say we're going to be risking 40 pips on this trade, all right? We don't want to risk that much. We're going to be risking 40 pips on this trade, and we're going to go for a risk to reward of 1:2. Boom, boom, boom. Now we know, we already know the asset, AUDJPY. Second thing, account size, 100,000. Third thing, stop loss in pips, which is 40 pips. And the third thing, account, the percentage we're going to be risking per trade, which we're going to risk 1%. So we go back to our software and AUDJPY. Make sure you put this sign, the slash sign, and then JPY. That is it. Click on it. We're using the same account balance. We're using the same 1% per trade. And here, remember, the stop loss is 40. Click on calculate, and boom, you can see it right down there. It means in our case, let's see, stop loss in pips is 40, AUDJPY, 100 is 1%. Sizing, something is wrong. AUDJPY 0. You see what I'm talking about? There's no way the lot size was going to be 0.0000. So it was just because my internet was down. So that's why we got the wrong answer. So we're going to refresh the page again and then try. So as you guys can see, that's the lot size you're going to use for AUDJPY. My internet was down, that's why we got the first answer wrong, which was 0.000 something. But after my internet got updated, you can see we got the right lot size. You can see. So with this one, I already know that, okay, if I'm opening my MetaTrader 5, I'm just going to go select the currency pair AUDJPY. In the place of lot size, I'm just going to put 6.4 or whatsoever lot size the software gives me. Then I click on buy. I already know my stop loss. I already know where my take profit is going to be. Boom. Then I sit and wait. That's called predefining your risks before you get into any trade. If the market doesn't go my way, trust me, I already know at the back of my mind what I'm going to be risking, what I'm going to be losing. I'm totally fine. So that even if for that particular day, I've only taken a total of 3 trades and I'm risking 1% of my account per trade, I will already before I even move away from my computer, I must have already told myself that, okay, if this trade don't go my way, I'll be totally fine losing 3% of my account. And if they go my way, I'll be totally fine making almost about 6% of my account or 9% of my account if I'm using a risk to reward or 1:2. So with that proper risk management, risk and money management, it gives you confidence. It gives you that peace of mind to trade. You're not more glued on your computer doing this, trying to do this. That's called trading in peace, which it starts by using the appropriate lot size. Remember, I promised you guys a gift at the end of the video, and that gift is simple. I'm here because of you guys. We are celebrating 700,000 subscribers on YouTube very soon. My channel has become the biggest in terms of Forex and in terms of finance in the whole continent of Africa. So I'm going to be doing a big giveaway on this video, which I'm going to be giving 5 traders $15,000 each, $15,000 pro firm account each, for you guys to be able to trade with big capital. There's always one thing you need to do. Just make sure you subscribe to the channel, make sure you like this video, make sure you share to at least 3 people, and then comment what you want to see on the next video. Comment the challenge you have, comment what you want to see on the next video. Follow these steps and you might stand a chance to win yourself a $15,000 pro firm account. And again, if you want to use my recommended prop firm, which obviously is going to give you up to $600,000 to trade, check the link on the video description. If you want to use my recommended brokers so that you can trade with the same broker I'm trading with, if you want to use Paytrex Pro, which has become the most viral and the most profitable Forex robot, then also check the link on all the links on the video description. And don't forget, you need to be in my free Telegram community so that you get updates anytime I come up with new update. Thank you guys so much for watching. Check the videos that are going to be coming at the end of your screen, because all those videos are related to risk management and they're going to prepare you to win in Forex trading. Take care, and I'll see you guys on these other videos. Peace.